Hello everyone, welcome to my new blog. Today my topic is costing in cost accounting. After reading this article, you will learn about the meaning of costing, aims of costing, its methods, and advantages. The meaning of costing has been defined by the Institute of Cost and Works Accounts England as the technique and process of ascertaining cost. So whereas Wildom has defined the costing is the classifying, recording and appropriate allocation of expenditure for the determination of the cost of products or services and for presentations of suitably arranged data for the purposes of control and guidance of management also. Now, aims of costing. Now we discuss about this. Main aims of costings are to determine the exact cost of each articles, to determine the cost incurred during each operation, to keep control over workers' wages also, to provide information to ascertain the selling price of product, and to supply information for detections of wastages. It helps in reducing the total cost of manufactures. It suggests changes in design when the cost is higher, to help in formulating the policies for charging the prices of the product, and to facilitate preparations of estimate for submitting the rates in tenders for quotations, to compare the actual cost with the estimated cost of the component. Costing method to be followed in a particular enterprise depends upon nature of industry, class of products and manufactured, quantity of goods produced, and the way the workers are employed and paid. The following may be considered to be important methods of costing: multiple cost, job cost, departmental costing, unit cost, the four main points, and also includes the process costs, number 5, number 6, operating cost, and each method is explained in short below and I discuss about this. So multiple cost, first of all, multiple cost. So concerns manufacturing a variety of standard product having no relations to one another in cost and the types of process, etc., such as typewriting, gramophones and cycles use the costing methods. Now job cost. These methods is also known as order cost or terminal cost. In this method, all the items are charged to a specific order. This method is also adopted by builders, contractors, etc., as it helps in showing the cost of each contract or job or order of works. Now, daily record of direct material, direct labor, and estimated overhead cost for each order is recorded in production order or cost sheets. Thus, the total cost of the job is obtained from the cost sheet also. Now, this method is useful when products produced are in distinguishable lots, and it is also desirable to keep a separate record of each lot. So, it is also largely used for costing of batches of similar items such as screws, utensils, shoes, nuts, bolts, but when there is an element of standardizations in the product, standard costing should be employed. Now, job order costing is a basic costing procedure, and this may be used in conjunction with costing system. For example, a factory manufacturing machine tools according to customer requirements and in doing so use standards parts and sub-assembles that can be pre-costed. Now, job order costing will then be necessarily only for the non-standard parts and for the final assembly details. The aims of job order costing is to determine the profit or loss earned on each job. So these service or serves as a check on the accuracy of the estimates on the which prices has been quoted. Now, departmental costing. This method is adopted in estimating the cost of output of each departmental separately for the manufacture of standardized products. For example, in a steel mill, there are three separate departments such as a blast furnace, open, hard and rolling mills departments. So the cost of all the three is determined separately. Now, unit cost. This method is adopted by the firms which supply a uniform product rather than a variety of products such as mines, quarries, etc. Now, process cost. This method is applied to industries such as oil refining, chemical paints, or other similar industries where the raw materials passes through a number of processes or operations before it converted into the final product. Byproducts should be taken into account while calculating the cost of each processes of manufacturing in this method of the costing. Now, this method indicates the cost of product at different stages as it passes through various processes or operations or departments, and therefore a comparison of cost of various processes is also possible, and this method is adopted for mass scale productions. For example, in garments making, cutting and sewing are two different operations. In this system, the cost of the two operations is determined separately. Now, operation cost. Firms providing utility services find this method useful. For example, in railway transport service, water works, electricity boards, etc., cost is determined on the basis of operations, expenses and charges are made as ton km or passengers per hour or per kilometer, per 1000 liter or 1 kilowatt hours respectively. Now, advantages of efficiency cost. Efficiency costing has got the following advantages which I am describing now. It helps in tracing wastage and spoiled materials, and it gives information regarding profitable and unprofitable activities both. It provides an effective check on wages system. Actual causes of reductions in profits can be easily found. It gives informations regarding component parts, whether it is profitable to manufacture them in the factory or to purchase from outside market. Now, it also helps in the settlement of wages rate with trade unions at the time of dispute. Now, it provides data of comparison between actual cost and estimated cost of an article. Now, it provides data for overhead, charges, etc. to assist in the preparations of estimates for future works. It helps the management in forming the policies of price and determination. It provides information of detailed expenditure so that it can be checked when it is tending to exit. It keeps control over selling price also. The main advantages of costing is to compare the output of the persons of same trade and working on same type of machines, and it helps in determining the efficiency of administrative and operative functions and decides the weak point also where wastage and expenses need check. Now, it helps the planning department and deciding about quality of material required and the sequence of operations in the job. Now, I discuss about cost types. So, there are 8 main types of cost. Since there are large number of determinants which influences the cost, these determinants vary from situation to situation and enterprise to enterprise. Therefore, for taking a decisions about any such determinants, we must analyze them thoroughly. In order to take right decisions, it is necessary to understand different costs. Some of them are explained Now I discuss about this. First of all, actual cost. These are the cost which the firm incurs while producing or acquiring a good or services. The actual cost are also known as acquisition cost or outlay cost. The examples of such cost are material cost, labor cost and rent. Now, opportunity cost. Opportunity cost represents the benefits or revenue foregone by pursuing one course of actions rather than other. This means when best alternative is adopted, it is obvious that second best alternative cannot be implemented and its benefits are foregone. Now, thus the benefit of these second best alternatives which has been sacrificed due to the selection of best alternative is known as the opportunity cost of the best alternative. Now, opportunity cost can also be defined as the returns from the second best use of the firm's resources which the firm foregoes in order to avail of the return from the best use of the resources. Now, some examples of opportunity cost. Opportunity cost of the funds employed in the firms is the amount of interest which otherwise could have been earned. Opportunity cost of labor in own business is the income which he would have earned by accepting a job outside. Opportunity cost of space used in expansion of the business is the amount of rent which could be fetched if it is rented out to somebody else. Marginal cost is the increase in cost as a result a unit change in output. Marginal cost can also be defined as the additional cost incurred when there is a unit change in the existing output of goods and services also. Now, the incremental cost. So, incremental cost, the difference in total cost resulting from a contemplated change in policy or the additional to cost resulting from a change in the nature and the level of business activity. The example of the change are change in output levels, product lines or product mix, adding or replacing a machine or distribution channel, advertising policy or level of investment also. Now, while taking a decision, it may be um, uh, ascertained that incremental revenue should exceed incremental cost. Incremental revenue is a change in total revenue resulting from a change. The difference between incremental revenue and incremental cost is known as incremental income. Now, sunk costs. So, sunk costs are the costs that are not altered by change in quality and cannot be recovered, and desperations, and these may also be defined as the cost for which the expenditure has been incurred in the past in which will not be affected by the particular decisions. So these the parts of the outlay, that is actual cost. Now, fixed and variable cost. Fixed costs are the part for the total cost of the firm which do not vary with the variation in the output. Examples of the fixed costs are rent of land or building, property tax, etc. The fixed costs are also as a overhead cost or indirect cost. If the production increases, the fixed cost per unit decreases as the total fixed cost is divided between large number of units. And variable costs are directly dependent on the volume of productions or services. Example of variable costs are material cost, labor cost, etc. Now, short run and long run cost. So, in cost accounting, to understand short run cost and the long run cost, we must first discuss short run cost and long run cost. So, short run is a period in which the firm is free to vary its output but does not have the time to change its scale of plant, as input like machinery, buildings, etc. cannot be changed by the firm at any moment since it takes time to replace and add or dismantle them. Now, to meet increased demands in such circumstances, only way is to increase output by intensive working or extend existing capital equipment also. So, whereas if demand decreases, the output can be reduced by keeping equipment idle for a proportionate period of time. Now, long run is a period in which all inputs can be varied as desired. This is a period long enough to enable to adjust is simply or supply and output completely to change in demand. Now, short run costs are the costs that vary with the degree of plant utilizations, that is output, and other fixed factors also, and it is a short run while fixed costs remain unchanged. Variable cost fluctuate with the output. Long run cost on the other hand are the costs that vary with the size of plant. Short run and long run costs are used for predicting the effect of temporary and permanent output decisions on cost and price, and hence profits also. Now, cost output relationship. Cost output relationship for short and long. Now I discuss about this for short run. For short run, the total cost TC to a firm for given level of output is the sum of the total variable cost, that is TVC, total variable cost, and the total fixed cost, that is TFC. Now we discuss about the properties of average cost curves. So first of all, we discuss about the here of a productions. So only one options, that small plants, is variable, whereas for production between both the options either to use small plants or medium sized plants are available. Again, the production between only medium sized plant can be used. These curves helps to find out which option is economical for a particular level of outputs. So here we have discussed only two options, but in practice larger number of options is available. In such circumstances, curves can be drawn for each art alternatives, and then best is selected for a particular levels of outputs. So that's for the end of the video, my friends. If you like my video, please subscribe, comment, and share my blogs. Thanks a lot for watching.